The capture of Nicolás Maduro by U.S. forces on Saturday, January 3, 2026, is a massive black swan event. When markets open on Monday, you should expect a classic risk-off environment driven by geopolitical uncertainty, partially balanced by the prospect of Venezuela's long-term reintegration into the global oil market. Here is the outlook for Monday's opening. 1. Gold, XAU USD, bullish, safe haven. Outlook. Gold is likely to gap up. Reports already show it hitting record highs near $4,550 in weekend-high pre-market sentiment. Reason. Geopolitical shocks of this magnitude, military strikes and the capture of a head of state, drive investors toward hard assets. If the situation in Caracas escalates into a civil war, gold could test the $5,000 psychological barrier sooner than expected. 2. S&P 500 ES futures, bearish initial volatility. Outlook. Expect a red opening. Markets dislike uncertainty, and a U.S. military intervention in South America raises fears of regional instability or retaliatory hybrid warfare, cyber attacks. Counterforce, energy stocks, Chevron, Exxon, might provide a slight cushion if oil prices spike, but the broader index will likely face selling pressure as risk-off sentiment dominates. 3. U.S. Dollar Index, DXY, bullish outlook, strengthening. Reason. In times of global chaos, the USD remains the world's primary liquidity haven. The DXY will likely rise as capital flees emerging markets and Latin American currencies, like the CAUP and BRL, in favor of the greenback. 4. U.S. 10Y yield, Treasuries, bearish, yields down, prices up. Outlook. Yields are expected to drop as investors rush into the safety of U.S. government bonds. Reason. The flight to quality usually sees a surge in bond buying, which pushes prices up and yields down. However, if the market starts fearing that this intervention will lead to higher long-term inflation via energy costs, the drop in yields might be short-lived. 5. Swiss franc, CHF, bullish. Outlook, very strong. Reason. Alongside gold and the USD, the CHF is the premier safe haven currency. Expect CHF to gain significantly against the euro and riskier currencies like the AUD. 6. AUD JPY and AUD CHF. Bearish outlook. These pairs are the canaries in the coal mine for risk. Expect them to drop. AUD JPY. The AUD is a pro-cyclical commodity currency, while the JPY is a safe haven. This pair usually crashes during military conflicts. AUD CHF. Similar to the above, the Swiss franc will likely outperform the Australian dollar as traders dump high beta assets.